Hello, this is Anne. Welcome to the weekly market analysis. In this video, I'm going to share with you my views on indices, oil, gold, and several cryptocurrencies. Alright, let's start with dollar index. We know it as DX or DXY. I gotta be honest that I do not trade most of the pairs that I'm going to review here. So many people in the group ask me to review these markets for them. So I will review it based on the order blocks. For those who are still very new to the order blocks trading strategy, you can visit the YouTube channel StarseedFX, and there is a playlist for a complete guide on how to trade the order blocks. Alright, let's start with dollar index. So here we will see the last breakout is over here. The market is in a bearish mood right now. This is the break of structure. This is the swing high, and this is the swing low. And where is the order block? The order block is the last bullish candle before the breakout happened. And apparently, it looks like it's been touched. If you were trading this pair, you can start looking for sell opportunities from here. So when this order block is become invalid, when it breaks this swing high. Now, why would I say that this market is in a bearish? When you take a look, this is going higher. So first, here is the last breakout, it breaks below. And secondly, let's make this smaller. Take a look. This swing high is close lower than this. So basically, this is a lower high. And then there is a break below over here, and this creates a lower low. When the market creates a lower low, there is high possibility that the price could go lower. Now, before then, the market will create a retracement, which usually happen to reach the order block. The order block is not a buy and sell signal, but it is a specific zone where the market usually react to start reverse to continue the trend. Okay, if you want to sell, you want to aim at least this low, on this lower low. This is the first target, and the second target, it could be this. Whenever you want to take profit, you always look left. For sell, you want to always aim the last low. For buy, the last high. So in this instance, we know that this is the last low. So this is the first target, second target, third target, etc. Okay, I want to show it to you. Here's how wonderful the order block is. Take a look. This is the past order block. Here is the break of structure, and this is swing high, swing low. Now take a look. Their order block is the last bearish candle before the breakout happened. Look how the market react to the order block. The market touch and then bounce and then touch the next order block over here before it goes down. And we will just see anything could happen. Like I said, if the swing high is broken, so meaning the downtrend reverse become an uptrend. But in this instance right now, the market is around important area to sell. Okay, many people ask me, do you think that the market is gonna crash? To be honest, I'm not a financial expert. What I'm doing, I just read the chart based on technical analysis, not based on fundamental analysis. I just read the market using the order block trading strategy. Now, if we talk about the market crash, where should it go? I really don't know, okay? This is not about market is gonna crash tomorrow, next week. We will just read based on technical analysis that is understandable for many people, or at least for traders, okay? Now, here there is an order block that has not been touched yet. This is the break of structure, and this is the order block that has not been touched yet. So suppose US dollar becomes so weak, it can go as low as 90 over here. So this is not about market crash or anything, but this is just based on a technical analysis. There is an order block over here that has not been touched yet. An order block usually is not touched right away. Sometimes it takes a long time the price to come back here. Like there is a rule that whatever goes up, it will go down. So at least we know when the market goes down, it has probability to come back to this area. Let's just focus in the now. Right now, the market is in a bearish, and you want to know the risk reward ratio if you were to sell. So what you do, you just measure this one. You can put it on the whole candle or on 50%. Let's just start it with the whole candle, okay? The whole order block candle here. Now you see, if you start selling here, let's say you risk 1%, you have probability to make 4% by aiming this lower low. But what I usually do to get higher risk reward, put the pending order on a 50% of the order block. You see, instead of getting 1 to 4, now it can give you 1 to 9. That's what you can do. All right, so you do not need to set an alert here because it's already touched. So you can try to find a sell opportunities, if you will, using your own confluence. And this is the target, is the last lower low, the first target, I mean. All right, now let's continue to US oil. Oil also gonna go lower, and here is the last breakout. This is our swing high, this is our swing low, and here is the break of structure, and our order block is the last bullish candle before the breakout happened. It's already been touched and it is gonna go lower. It's already too late. I'm not gonna sell it from here if I were to trade the oil. And the first target is over here, and here where the market could go, there is a break of structure over here. And I wouldn't consider this as an order block because there is the wick passing the break of structure. I would consider this as the order block. This order block is your second target. The price may reach here and then bounce above to pick up another order block. Probably could be this blue one if there is no more blue candle after this red candle break this structure. For now, let's just focus to see what's gonna happen in this. Well, if we talk about daily, if you are a swing trader, you do not want to enter around here because you know that the first target is here. So you want to sell from here, but it's already too late. So it's better you just wait. Probably the market is bouncing around here and go up and sell again. And here's the thing. There is also another breakout here and another break above here. Look, there are a lot of order blocks that has not been filled yet. This one has already been filled by this, but this one is not. So there is probability that the oil can go lower to 52 per barrel. It may take some times around here. We never know. It may take only a few days in a day. We just don't know when it comes to the market. So we cannot predict like what happened because it's out of our hand. But using the technical analysis like this, you can predict if the market go lower, where the lowest point it can go. Just use the order block. Now let's go to DAX or German index. Here the market is in a bearish market even though it looks trending, because take a look, this is the last high last time and here is still close lower than this one. As long as this high is not broken by the current price, so the price is actually in a bearish mood. Why we say it's in a bearish mood? Because we know here is the last breakout last time. So here is our swing high and this is our swing low, and there is the break of structure over here, and our order block is the last bullish candle before the breakout happened. This is actually a very good area to sell. I'm not saying that you just go ahead directly sell. You just have to look at with your own confluence, whatever it is. Some could use moving average, some other could use RSI, any indicators. But what I usually do when I see something like this, I would just put the pending order on 50%, and then this is the last low, is the first target of our take profit here. It gives me like 1 to 8. So this is actually a very good trade setup. But again, this video is just for educational purpose only. I'm not telling you to go ahead right away to sell. Your account is your responsibility. So you only want to trade that you understand and also you feel comfortable with the whole market condition. Now let's go to US 30. And here the market looks like to start bullish again. Take a look, this is already broken and there is a giant order block over here that has not been touched yet. Is this a break of structure? I don't know, let's take a look. I think it is, but well, to me this is not really clear. We will just wait. But here is a giant order block. When you see a giant order block like this, you can decide to make it just right away 50% like that. It is not like a must, it's just too big if you want to make an order based on the whole candle like this. And I want to give some comments on these pairs. For some reason, for US 30, I think if I'm not mistaken also for US 500 that's related to technology, the order block is working nicely when there is a very good movement. What I mean by that is Let me show it to you an example. So here is the break of structure, okay? And then here, another break of structure basing on this swing high, swing low. And then also here, another break of structure. Now, I want you to take a look. From the breakout to create the last higher high, it's rather far. It's almost like 50-50 from its swing high, swing low. So from the breakout, 50% above, 50% below, this is what usually good for this pair. Now, what I mean by that, look, when it breaks above, it is like more or less 50% to the top, 50% to the bottom. This order block works really well, usually touch and goes up again. Now, let's take a look at this. This is the last breakout. Oh, sorry, I think this one is over here. So here is the order block because this one is passing a little bit. Now, take a look. From here and here as 50%, from here to here as another 50%. So this one move like this, if you know what I mean. So this is the 50%. So there is high movement and come back to touch the order block and then goes above. So you do not want to take the order block that I usually call it as hidden order block. It's barely work with this pair. What I mean by hidden order block is something like this. Look. Here, okay, this is the break of structure, right? It just make a little bit high and then going down. Take a look. This order block doesn't work. So you gotta be careful when you trade this pair. Look, this is break above and come back. It doesn't go up, but it keeps going down to pick up this order block. So it's like buying at the dips, something like that. That is how the order block work for this particular indices. So whenever there is a break above, for example, wait until it goes higher, and then when it goes higher, you know that there will be order block at the bottom, can be touched like this. As for right now, here, there is the break of structure. This one is not too high yet. So if it is coming back, I'm not sure if the price will respect this order block. It probably could go lower to pick up this one instead of this order block, because this is break above, so our order block supposed to be this one. But since the retracement is just a little bit, if the price coming back here, this may not work. The one that may work may be this one, to pick this one again for the second time. We don't know. Usually it needs a very high breakout to come back to pick up the order block. You just draw this, the breakout, high, low, so between the last high, low, look, around 50% of the order block is usually being picked up by the price. But if this is the break above and the price retrace only until here, this order block usually wouldn't be picked up, okay? You just can check it your own. It does not only work on D1, it's also do the same on H1 for this pair. All right, now let's go to US 100. Here is the last known break above. So here is the last order block, and this is our swing high, and this is our swing low, and this is the break of structure. So here is the order block, the last bearish candle before the breakout happened. I think it's already been touched over here, but you also gotta be aware that there is another order block that has not been touched yet. And this is the break of structure. So here is the swing high, and this is swing low, and here is the order block that has not been touched yet. So here is the look of US 100 with the order block analysis. Now let's go to US 500. Here is the last order block that has not been touched yet by the price, and this is the break of structure. This is your swing high, and this is your swing low. You may want to put an alert over here. Right click, choose trading, set an alert. Okay, now let's go to gold. Gold, the last break of structure is here. So gold is in a bearish mood right now. This is the break of structure. This is your swing high, and this is your swing low, and your order block is the last bullish candle before the breakout happened. Look, right now the market can bounce and it can go up. Why? Because last time there was a break above here, and we know here is the break of structure. So the order block is the last bearish candle before the breakout happened. Now you can make it like ping pong, okay? So here there is a good possibility for us to start looking for buy for gold. Ideally, your first target is over here. Anything could happen. Gold could go higher than this one. It will make this order block become invalid. And also you have to be aware that there is an order block at the top that's still not been touched yet. So this is the break of structure and this is the order block, but overall the market is bearish. You know why? Let me show it to you. Take a look. This is high and the next high is close lower, and this is also lower and it's getting lower. So most likely gold is more bearish. It probably couched this one to only go lower, at least to pick up this order block. Take a look. There is an order block in the past that has not been touched yet. This was around April, I think. So you gotta be careful in here. Do not really buy unless the market breaks above on the lower time frame, okay? Because there is one order block here that has not been touched yet, okay? So this is how the gold look. If you wanna buy, you just gotta be careful because the market is basically in a bearish mood. If I were to sell gold, I will just wait at least the market come back to this order block, because right now there is no reason for you to sell when gold is basically in a buy order block area. But again, you want to be careful to buy because gold is in a bearish mood right now. So now let's continue with the cryptocurrency. Here is the last breakout. Here is your swing high, swing low, and this is the break of structure, and your order block is the last bearish candle before the breakout happened, and this price probably still go up and it could reach this one. Take a look here. There is the break of structure, swing high, swing low. This is break of structure. Your order block is the last bullish candle before the breakout happened. So you can do ping pong. If the market touch here, you can place an alert around here and also around here. We don't know which order block that is gonna hit first, either this one or this one. It looks like you can play ping pong around here. All right, so now let's go to Ethereum, and it's almost similar like Bitcoin. This is the last breakout, so right now it's in a bullish mood. This is the swing high and this is the swing low. This is break of structure. Your order block is the last bearish candle before the breakout happened. It's over here. So you can set an alert around here, and that's it. If you were to buy from here, again, when the market come back to the order block, you want to measure the risk reward ratio, okay? I always put on 50%. Currently, it will give you a little bit 1 to 7. But if you put it on the whole order block, it gives you less than 1 to 30. Right now, we don't know. Probably it can go a little higher, so it gives you more risk reward by the time when the price come back to this order block. All right, guys, I think that is all for today. I hope this analysis help you to learn more about the order block so you know how the price movement, you know what to do for the next week so you can create your own trading plan. Thank you. Bye-bye.